Here is a highly overlooked strategy that can double your estate tax exemption. It's called portability, and it works for married couples. Portability allows a surviving spouse to inherit their deceased spouse's lifetime estate exemption, doubling the amount excluded from the federal government's death tax. Right now, that amount is $11.4 million for individuals. In this case, when the second spouse dies, that person is able to pass on $22.8 million to their heirs tax-free. Let's say a couple has a $16 million estate, split evenly between husband and wife. The husband dies first, and the wife inherits everything. She now has an estate worth $16 million. Without portability, at her death, she has a $16 million estate minus her exclusion of $11.4 million. That's $4.6 million times the 40% death tax rate. The estate will owe $1.84 million in estate taxes. With portability, no taxes are due because her estate is worth $16 million and her exemption is $22.8 million. But portability doesn't happen automatically. You must file the IRS Tax Form 706 within 9 months of the first death. Then there's also a 6-month extension to file. But you may say, I don't have an estate that large. Why should I bother? Well, a couple of reasons. First, the current estate exclusion is set to revert to its previous level in 2026. That would cut the current exemption in half. Second, what if a deceased spouse left you $1 million or $2 million? It's below the exemption level right now, but what if you live 30 years? You don't know how much the money will appreciate by then. It may very well be above the taxable limit at that time. So consider using portability. It may save your heirs a lot of money later on. More useful information is on the way, so subscribe to the Alhambra Investments channel.